Hey everybody, how's it going? Today what I'd like to do is discuss an article that I saw in the Washington Post. Recently I discussed an article that showed up in Bloomberg and why I thought that article was horrible with all of my supporting reasons. This article I think is actually worse, and I'd like to point out why that is. These types of articles make me sad because there's a lot of distrust in the media in this country, and we need people that are willing to do hard reporting that report real facts. When people no longer trust the media, people start living in their own alternative reality. When we don't have the ability to agree on a hard set of facts, we are genuinely screwed. And there are lots of media outlets that actually do good hard reporting, where this is a fact. I am going to report what this person said. I'm going to report what occurred at this place. And what I notice is that when bad opinion journalism seeps into the hard reporting, like what I went over in my earlier video, or in this case, just opinion journalism that is in the opinion section, I'll give it that, but is so bad that it just kind of distorts your ability to trust everything else that is telling you. And this is very, very bad because we need to be able to agree on a certain hard set of facts. We can disagree on how to interpret them, but we cannot disagree on the basic fundamentals of what is going on, of what is reality. And right now you have lots of people in the United States that live in their own reality. They see the world through their prism, and that prism is starting to distort more and more and more. And this is not doing any good. So let's read the article and go over why it is I think this is one of the worst articles that I have read on the entire subject. The good guys in the Gamestop story, it's the hedge funds and the short sellers. A provocative title. Until last week, the word I cannot read because I went to a New York City public school absurd bubble was the Dutch tulip mania. At least the South Sea bubble of the 18th century involved fraud. Investors thought they were buying shares in a valuable company. At least the dot-com bubble of 1999 involved technological promise. Investors thought the internet would transform business even faster than it has. But in Holland, in the 17th century, investors bid the price of simple tulip bulbs up to ridiculous heights. It was the purest of idiotic fantasies. Last week, a similar fantasy reared its head. The idea that Gamestop, an ailing retailer whose shares had slumped from $57 to $4 since 2013, should suddenly trade at $350. The speculators driving this 87-50% reevaluation have no evidence that this makes sense. Indeed, they disdain evidence. GameStop's price-to-earnings ratio is infinite because the company earns nothing. Its prospects are grim because it is mainly a brick-and-mortar vendor of video games, a product best sold digitally. But the speculators don't care. They believe, and their force of belief has been contagious and self-fulfilling. Now, the reason that I say that this is one of the worst articles I've read on the subject and should be an embarrassment to the Washington Post is because if they simply went over to the wallstreetbets section of Reddit, you would see, if you clicked on any of the top threads when you click due diligence, any one of those threads, virtually all of them, mention the reason that people believe that this stock is going to go up and why they believe that. They believe that due to 120 to 140% short interest. It is not just about fundamentals of a video game retailer. You must understand that the fundamental here, one of the fundamentals, is the short interest. A 120 to 140% short interest ensures that there is going to have to be covering taking place, meaning that if there is even a small increase in the price of the stock, there are people that are going to lose good amounts of money, and they are going to have to cover. They must buy back in because they shorted those shares. This is never mentioned throughout the article, and the omission of this very piece of data that is mentioned in almost every single thread on Wall Street Bets that mentions GameStop, that is a clear-cut part of their technical analysis, is negligence that should not be in a high school book report, much less the Washington Post. I find that to be a disgusting level of omission. That is the standard straw man crap that these people are just buying without fundamental whatever. No, you're ignoring all of it. Now, whether or not you disagree with the extent to which they should be making these purchases based solely on short interest, that's a discussion we can have. We can sit down and you can say, okay, short interest of 120 to 140%, that should only bring the price from $4 to $30, but then you sell out. And someone else may say, no, I think that'll go to 100, and someone else will say, no, don't sell out until 1,000. We can have a conversation where people disagree about it, but to simply pretend that the short interest is not on the table at all is something that I would expect from a garbage institution, and, well, I am reading the Washington Post. Let's continue. This is not the worst of it, however. Financial markets are usually stabilized by rational investors. If the crazies drive stocks to an absurd height, thoughtful people take the other side of the trade until prices reconnect with reality. The correlation can be late and messy. It's hard to be thoughtful when markets are wild, but at least our culture generally applauds the partisans of rationality. After the subprime bubble popped, the plucky minority that called out the excess became minor folk heroes. There was even a movie about them. Now, I will agree that there are people that will point out when something is a bubble. As I've said, Peter Schiff has predicted about 14 of the last 2 recessions, and, 14 out of 2 is a good batting average. And the thing that is bothering me here is how, again, they're looking to put a bow tie and a suit and tie on it. The rational investors, the people that care about the P to E ratios, they really need to dig in on this narrative that the people who are involved in this are pure morons that are doing something like manipulation because they are idiots, because when you run that narrative, it is easier to say you need to protect these people from themselves, you need to protect those people from society by not allowing them to speak or not allowing them to buy. That is what this is doing. They are so rational, they are so level-headed, they are so smart that they cannot use Google to check what the short interest is on a stock before writing an article in one of the most famous newspapers in the United States. So far, this time is different. The Gamestop speculators are not merely in a frenzy about one stock. Their goal is to destroy the traders who link stock prices to fair value. To suggest a political analogy, they are not just blindly devoted to their candidate, they deny the legitimacy of the opposition party. They are not just acting within the system. They want to overthrow the system. It's as though, just imagine, a rabble gripped by conspiracy theories were to attack the rules of democracy itself. The name GameStop is apt. Do you know what cheers on irrational conspiratorial thinking? When most news outlets in the country that are authoritative, when covering a particular story, ignore the most important element of it so that it's easier to paint the people they're talking about as morons. What you're doing is you're insulting people, you are looking down on them for having a conspiratorial way of seeing the world, but you're not trying to understand in any way, shape, or form the role that you play in that by going above and beyond, out of your way to have blinders on and ignore the very facts that would counter your own narrative. If you were willing to engage in even 20 seconds of research, you would understand why they believe the way they believe and why they think the things that they think. But you're not willing to do that because you work for the Washington Post. And if you were willing to do that basic level of research, then you would be somewhat trustworthy. But the reason that you have people that think that I can't trust anybody, the world is screwing with me, they're out to get me, the reason that you have that is because sometimes it actually winds up being true. And it's not true all the time. In fact, it's not true most of the time. But when it's true in these types of instances, and the people involved realize, wait a second, you just lied about me. I know me, and you just lied about me. Okay, now I don't trust anything you say about anything else. And the thing is, you may have a wealth of information on lots of other topics. You may have a wealth of information and a wealth of honest, real reporting that makes sense, that actually explains the way the world is for what it is. But once people are no longer able to believe you, they're going to substitute what the hard reporting that you do is for their own reality because they can't trust you anymore. Normal people who don't fully understand every subject in the world or have access to all information are not going to be able to tell when you are telling a lie or when you are not. So when they read something that is fundamentally untrue based on their own knowledge of a situation, now, well, I guess the safest thing to do is to just not trust you at all. That does no good for any of us. The particular targets of the GameStop crowd are hedge funds and short sellers. Here, a couple of definitions may be useful. Generally speaking, a hedge fund is a small to medium-sized company that makes money by choosing smart investments. There is nothing nefarious about this. To the contrary, if you don't like too-big-to-fail banks that get backstopped by taxpayers, small enough to fail hedge funds ought to be celebrated. If you worry about complex financial conglomerates with corrupting conflicts of interest, single-purpose investment boutiques are simpler and healthier. On the online forums where the GameStoppers congregate, you read complaints about hedge funds being bailed out during the crisis of 2008. Actually, banks, brokers, insurers, mortgage providers, money market funds, and even car companies got rescues. Hedge funds got nothing. What they are discussing here is a disdain at an ideology whereby people who make highly speculative, highly risky investments have the ability to mess with the financial system. And what they are doing here is they are outlining that these individuals seem to have a very similar ideology and a very similar strategy to the individuals at Melvin Capital that we are now looking to bankrupt. There is nothing there that is incongruent. What about short sellers? These are specialists that research stocks that might go down, sometimes because bosses are illegally covering up bad news about their companies. When short sellers identify a case of fraud or similar, they borrow and sell the stock, hoping to buy it back at a lower price later. Again, there's nothing evil about this. To the contrary, it's a way of keeping prices honest. A market without short sellers is like a political system without investigative journalists. We are not saying that short sellers across the board are evil. And I have brought up in several of my videos that it was indeed the people who were shorting companies like Enron who had the best incentive structure to figure out the shady shit that Enron was doing. What we're saying is, how do you get to 140%? Like, there is shorting, and then there is naked short selling, and then there's naked short selling to the point that we have here. There is a fundamental difference between basic short selling and this. And I do support there being an investigation into whether or not this was naked short selling, and perhaps we look over how it is that we deal with naked short selling when it gets to this extent. Once you get to this point, how do we prevent this from occurring into the future? I don't know. I don't have a particular solution there, but a lot of people have acknowledged and suggested that this is a problem, and I think that it's right for them to do so. This, however, is not how GameStoppers see things. They have gone after a short seller named Andrew Left, hacking into his social media accounts, sharing his personal information online, ordering dozens of pizzas to be delivered to his home in the middle of the night, and texting his children with threatening and profane language, according to the Wall Street Journal. Perhaps not surprisingly, Left has announced he will stop playing the game. Irrational stock prices will be that much likelier. There's a few things that I want to bring up here. The first is that this is a very, very, very low IQ method of slander, and it often works. For instance, when it comes to people who may support Bernie Sanders, what they will do is they will point out mean tweets that come from people that support Bernie Sanders and pretend that that means that every single person that supports Bernie Sanders must be this horrible, violent, profane, evil person because they support Bernie Sanders. But if you were to find people that had mean tweets or said mean things in support of other political candidates that were more preferred to win because they would upset things less, that just gets swept under the rug entirely. This is one of those, people will say to me all the time, Lewis, look at how horrible your YouTube comments are. It's like, dude, I grew up on an island of 400,000 people. My YouTube channel has almost 4 times as many people as the fucking island that I grew up on. Of course there's going to be nasty shit in there. Of course, if you have 1.4 million people in a comment section, some of those people that are typing shit are going to be crazy. Some of the people in my YouTube comment section are probably serial killers. Some of them are probably PhD scientists. Some may win a Nobel Prize. One of them may cure cancer. Some of them may be rapists. I don't know. There's 1.4 million people. And to pretend that you can just, let's say that right to repair is horrible, or that people who want to fix MacBooks are horrible because of what you see in my comment section, is fundamentally ridiculous. And here, when he says GameStoppers, he is not making any distinction there. There's no distinction whatsoever. Me, as a person that may own a couple of GameStop shares, is equal to someone who is doxing people and harassing their children. It's just one nice label to fit them all. Further, as I mentioned in a video about a week or so ago, I don't know how much I trust this. Again, if someone is receiving doxing and threats against their family and harassment, I'm sorry. That is not okay, and that should not happen. As someone that has over 1.4 million subscribers and a public location in New York City that is open to the public, I assure you I have had my fair share of weird shit. I am not a fan of it, and I would not wish it on my worst enemy. That being said, I don't know how much I believe it. I don't know how much I buy it. He said, we are going to post a video explaining why it is that you should not buy this, that you should sell out immediately, why it's going to crash. And then you had people going, oh my God, is it going to crash? Oh, maybe we should sell. And then the next day he says, oh yeah, it's the presidential inauguration, so I'm not going to do my stream. It's like, what is this? What is this clear-cut manipulative horse shit? I mean, you forgot that January 20th is the day that the president gets elected? Like, of all the elections in our lifetime, this is the election. This is the inauguration where you just weren't paying attention. Yep. Anyway, the worry is that GameStoppers will now target others. Short sellers operate in the open. You can check short selling volumes for any given stock on Yahoo. By whipping up frenzied buying of a heavily shorted company, speculators can cost the shorts billions and maybe put them out of business. Already, GameStoppers are buying other beat-down companies, such as Cinema Giant AMC. A Goldman Sachs index of heavily shorted stocks is up sharply this month because these shorts have been routed. Is there anything wrong with that? This is a game. This is a game. The stock market, in many ways, is a game. And if you are going to heavily short a stock, then, again, this is the way it works. You're always open to losing more than what you initially put in. That is part of the game. When I purchase a stock, it can go down to zero. If I were to short a stock, I can lose infinitely to the point of bankruptcy, far more than my initial investment. There are no guarantees when it comes to investments. So perhaps, maybe people should stop taking such risky investments. Maybe if your short float is going to be available for anybody to see, you should not double or triple or quadruple down on a risky bet. And it sounds like someone is salty that others are able to see their risky bets out in the open. Hedge funds and short sellers are out to get rich. They are certainly not angels. But there is a difference between trading based on evidence and research and trading based on conspiracy theories and mob tactics. Over the past week, it's been tempting to celebrate the colorful rebels. They represent the democratization of finance, the revenge against the fat cats. Now it's time to remember that the truth matters. Indeed, the truth does matter. And this article, not mentioning the short interest involved in GameStop and how that was the driving factor behind most of the people that decided to get in on it, shows that this is not a truthful article and is, in my opinion, completely full of shit. At the end of the day, this is not good. Again, as someone who reads the New York Times, as someone who reads Bloomberg, as someone that wants to get a take, wants to understand hard reporting, hard on-the-ground journalism, and try to understand what's really going on in the world, I read a lot of these outlets. And what bothers me is that I see the level of cynicism that people that I know, that friends or family members, or people that I just generally meet or speak to in the comment section here, have for these outlets. Even when one of those outlets actually produces a piece of journalism that's really spot on, that actually explains what's going on in a manner that makes sense and reports facts, people say they have their fingers in their ears and say, no, I'm not going to believe that. And why do they do that? They do that because they are used to being gaslit like this. And once you do this enough, people will say, okay, screw it. I'm not playing your game anymore. I don't believe anything that I read from your outlet, even if it's true. And if what you're saying is inconvenient to the reality that I wish to live in, if what you are saying is counter to the prism through which I see the world, and that causes me internal stress because I see the world differently than the way you see it, and I don't want to believe the way that the facts that you've laid out would cause me to see the world, well then, I'll just throw it away altogether. That's bad. And what really bothers me is, again, as someone who reads these outlets, as someone that actually will get news from them that is helpful and allows me to understand the world around me, it pisses me off when they do this. Because, again, this is something I know about. So I've been following this story. And you understand that I am not a news person. I am a MacBook repair dude sitting in his chair next to his sleeping cat. I am not a professional journalist. I'm not a professional hard news reporter. I'm not a professional interviewer. I'm a random guy that fixes MacBooks. And if you're able to get the story wrong to such an extent, when I've just been following this now for pretty much a few days, how is it that I should trust what you say on other matters? Because I don't know about the other matters. I don't know about what's going on with senators and congresspeople and pipelines and oil drilling and taxation and I don't know what's going on in Washington, D.C. I don't know what's going on in Omaha, Nebraska. I don't know what's going on in South Dakota. That's why I read the paper, to gain an understanding of that which I don't have understanding of. But if you're going to get things so wrong, so horribly, horribly wrong, and not give me all the information, if you're going to hide facts out of either ignorance, bias, or willful manipulation, then how can I believe you with everything else you tell me? And I think that at some point in time, these media outlets are going to have to understand how things came to be the way they are. Now, to be clear, I think that Trump lies a lot. There's a lot of crap that he says that's blatantly untrue. And he'll just say fake news, fake news, fake news, fake news. A lot of people forget that Hillary actually started that. She was the one that was saying fake news before Trump. But anyway, he'll say fake news anytime he gets caught in some bullshit lie. And he does lie a lot. And fuck, he's a Manhattan real estate mogul. Of course he does. They all lie. The thing is, you have to kind of wonder to yourself, when he's able to say something that's bullshit and then when you call him out on it, he just goes, oh, fake news. And people go, oh yeah, fake news. How did we get to that point? We got to that point because of shit like this. And I believe that there is a chance to fix this. There is a chance to reform this. There is space for this to stop. And I hope it does. I really do. Let me know what you think in the comments down below. Do you think I am being a bit too harsh and too critical here? Or do you think that it is completely ridiculous and absurd that in this entire article in the Washington Post, the short interest on GameStop did not come up once as one of the primary drivers of the individuals who are looking to purchase it, and that portraying them as irrational or ridiculous is asinine given that omission of fact? Let me know what you think. That's it for today, and as always, I hope you learned something. I'll see you all in the next video. Bye now.